Since the Lehman crisis, governments and central banks around the world have been scrambling in order to pick up the pieces, and here we are today talking about the cracks appearing in the global financial system right now. You came here for the truth, so let me unveil that for you. I want to get into some deep intel today. I wanted to start with this little cartoon very first, and you can see on the left-hand side the USS Big Government, and he's calling at the individual, the taxpayer at the bottom on the life raft. He's saying, "What a stroke of luck that we found you. We need a tow." And although it is a cartoon, this is exactly what's happening in reality. The government is huge, it's massive, and it isn't just in the US, of course, but here is a very good example of the way it works. It is all of this that continues to explode, and it does so on the back of the taxpayers, and nothing is being done to resolve that issue. They're always trying to fix some other issue, some external threat, but they're never looking at the individual taxpayer. So this cartoon is actually quite telling. Now, let me move on to this. The debt limit, I've said this countless times, every single time this has come up in the news. In fact, every time they have reached the end of their amount of debt, the debt ceiling, they have to really call an emergency. And right here we have again the situation occurring. They get right to those last few dollars and they make it an emergency. So of course, then it gets pushed through with all sorts of very unusual and criminal things passed through along with it. So here we are once again facing the exact same crises over and over again, and much of this is man-made. I mean, they're expanding these on purpose, the things like the military-industrial complex having such a deep control over this system, and the Congress, although some of them disagree with what's happening with the wars all around the world, building billion-dollar facilities in other parts of the world, and of course the Congress doesn't defund these operations. They just may have some rhetoric and nothing else. It's all talking points. It is nothing but a fallacy that we're seeing. And let's move on to this right here. Fed stress tests still pose puzzle to banks. This is out of the Wall Street Journal. Goldman, JP Morgan, Morgan Stanley scale back plans by at least $11 billion. So we're talking about 6 years after the Fed stress test began. These banks are still straining to decipher them. There is such a complexity with all of the derivatives, with all the way that they rate these agencies, with the rating agencies and so on, that even the banks that are involved, that are really in control of the Federal Reserve in many ways, can't even figure it out on their own. That goes to show you how ridiculous this whole system has become. So right here, they scaled back plans to return money to shareholders by at least $11 billion in the last week after their own assumptions about future risks turned out to be rosier than predictions made by the central banks. So we are seeing this infighting that's taking place with the politicians, with the bankers, with the Federal Reserve. There is a lot of talk that's happening back and forth, but we all know specifically that they are all on the same side. They make the deals behind closed doors, and then we find out about it after it's already written into law. Not even the Congress themselves are able to read these bills before they sign on the dot. So that, of course, means they don't know what they're signing about, and we don't know what it's all about until it is been put into place. So this is nothing but a lie when they pretend to tell us this sort of information. Let's move on right here out of the Business Insider. They're talking about a concern that the move in the US dollar reflects a dislocation within the financial system. A dislocation is something that I bring up often. Capital flight to the U.S. is a symptom of systemic risk in financial markets. Certainly, dollar shocks in the past have been associated with major market events, shown in detail in chart 8, so you can check that out for yourself. There, we're talking about the Volcker shock, the 92 crisis, Lehman in 2008, and so on. So, you know, once again, you could read this for yourself. I just wanted to note this at the bottom in the highlighted portion. Rates around the world have been cut 558 times since the collapse of Lehman. Now think about that for a second. 558 times in a few years. Central banks around the world said, we are in a crisis, we need to bring the rates down. That's a total of 558 times. This is unprecedented, what we're seeing here. But of course, even in the worst of times, central banks, governments, the mainstream media, they were all projecting the image that everything is under control. But this right here shows you that over 500 times, they knew specifically that it was not under control. They never do it right. They're never able to predict it in advance. They're always way too late on everything they do. Of course, if they bring up interest rates now, which they absolutely should in order to stabilize the economy, that would obviously cause a recession, which is the reason they don't want to do it. However, they should do that to bring some stability to the system. But they know as soon as they do that, it's going to bring the market downward. Now, there's a lot of talk going either way. I don't want to get into that in this video. However, just wanted to note the fact that we are definitely in a crisis zone at the moment. Look at this article right here. This is coming from South America, and we're looking at offering contracts for a difference. Financial derivatives that are off limits to retail investors in the US and highly regulated elsewhere. We're talking about contracts for a difference. These are completely false derivatives that are no different than what we have seen from basically the late 80s and onward. And this is in Chile. And basically what we're talking about is the expansion of these gambling techniques that they have been off-putting essentially onto the markets. So this had me thinking, bringing back into the pages of history with Enron. So right here, if we look into this, and we see this here, Partnoy, and I'm talking about Infectious Greed. That is an excellent book. I hope that everyone would read it. But essentially, he said that it got to the point where traders at Enron were even creating what they call financial instruments. I call it gambling, to gamble on the weather. They actually have, and I've shown this before, derivatives to gamble on the weather. This is not even an actual underlying asset. They're simply just gambling, and then we have millions and billions of dollars that are sort of tied in a way to our pension funds, to the stock market as a whole, and these are the kind of things that could bring the market down very, very easily. So just let me go on to this article right here out of Bloomberg. U.S. economic data has been falling short of the prognosticators' expectations by the most in 6 years. You have the Federal Reserve, you have all these rating agencies, they make up all these rules and they have these algorithms that determine when something is doing good or bad. Why in the world do we need to look at these type of indicators, although they're very interesting to cover, when all you need to do is look at how many people are currently in the workforce as one example. Look at how many people are on food stamps. Look at the disability. Look at how many people are renouncing their U.S. citizenship. Look at the jobs that have been offshored overseas. Look at the amount of bailouts and where that money has gone. Look at how bad in total overall the situation is in any particular country or city or state, wherever it is that you live. And you will have the real economic indicators. You do not need to look at the algorithms, to look at all of these computations that they put together, which are designed specifically to prop themselves up. So of course, it would be pretty silly to take these type of issues, even when they are proving our point. Still, when you look at real indicators, it shows you the truth, and there's no doubt about that. Let's look at this. We're talking about Obama. Analysts are questioning whether the White House is protecting one of its inner circle members in a leak investigation, especially given the Obama administration's demonstrated willingness to prosecute and imprison lower-level government employees for providing classified information to the press. That's right. If you're Edward Snowden, you have to run and hide. But if you're a high-level individual, you get away with absolutely everything. And we have seen that over and over and over again. And those individuals who do get prosecuted for what they've done, it's always nothing but a slap on the wrist. And that has been going on for such a long time. You can read Smedley Butler's book, which was absolutely incredible, although very, very short, but it just goes to show you that war is a racket, and he was very right on that topic. This was out of the Washington Times, but I want to move on to this article out of the Financial Times. Sweden sends troops to Baltic island amid Russia tensions. Remember that this is still going on today. This has not died down at all. Sweden is going to put troops back in the strategic Baltic Sea island of Gotland after a decade-long absence, as increased saber rattling from Russia unnerves the region. And this is the defense minister actually saying that they would recommend placing about 150 soldiers in Gotland. Of course, that's not huge, but it does go to show you that they are concerned. So what we're looking at here is tension. Now, tension always brings a real instability and volatility to the markets. Volatility are where we have these computer programs that prey on. They use their algorithms in order to profit and gamble additionally on the volatility specifically. So the more volatility there is, the more volatility there will be. And that is sort of the situation that we find ourselves consistently in. And this is not going to change anytime soon. So that's all for this video. If you found it informative, please give me a thumbs up. I really appreciate that very much. I'm trying to get back to all of the emails. There are so many pouring in. I've replied to almost all of them as of yesterday, so just wanted to note that. And if you haven't already, you need to become an insider, because the insiders is where I give out all my best intel for free. That is available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.